Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. This is the Monday Experiment Addison. And today I want to start talking about crowdfunding. I love startups because I worked for a startup which got acquired by SAP. So I learned and I saw how my startup grew. Of course, I didn't make enough money, otherwise I wouldn't be doing this. And talking to you guys, would be vacationing somewhere else. So definitely, startup is a way to go um, if you want to speculate, right? And you got to make sure what you are investing in. But crowdfunding is the way for you can invest in a startup. So it's pretty much a method. Crowdfunding is a method of raising capital through the collective effort of friends, family, customers, individual investors, etc. And now it's more popular than ever. I started dabbling in crowdfunding same time I started investing in real estate as well. So as you can tell, I must have made a pretty good amount of money in 2015 and 16, so that I started investing in real estate, crowdfunding, etc. Pretty much I started trying out every investment. And yes, at that point, I was just trying out, trying to understand. But now looking back, even as of last year and this year, I've just been trying out and experimenting things so that I can teach others if it worked or not, how did I do, how did I plan it out, etc., etc. So the very first website I went to when I decided to start investing in real estate, or not real estate, but the crowdfunding was a website called Crowdfunder and crowdfunder.com. And funny, I just looked it up today and it doesn't even exist anymore. And I'm glad that it does not, because I, um, I of course lost money on that website or every investment I made through that website. So it was a pretty interesting experience though. So as you can tell, I go to crowdfunder.com, and anyone who is watching us on YouTube, it does not exist. But I pretty much made one, two, three, four investments to this website. The first one was Ask Energy in oil and gas drilling. Of course, the company disappeared. So that was my gripe with Crowdfunder, that they were allowing anyone to just come and start raising fund from their website. And that's why I am not surprised that this crowdfunder.com is not around anymore. Maybe they started another company as well. But the idea was Ask Energy, very first investment, I put 10 grand, the company disappeared, money is gone. The second one I put money in was called Skit, Skit. That was more of a Skit platform for iPad and iPhones. Of course, they couldn't sustain either. I had put 5 grand. That company also disappeared, right? So I realized that somehow this company, and still I was exploring, I was talking to, and many of you are thinking, oh, well, why did I invest in these two companies? Guys and gals, I actually analyzed more than 20 companies which were on Crowdfunder and picked those two companies. Of course, I made mistakes, and I was hoping that crowdfunder.com themselves would have done or vetted these companies before I would have done it, or I would have had to do it, right? So that was the whole purpose. The third one I invested was equities.com, 5 grand. The good thing is still my investment is there. The company equities.com still exists, and it's in business. So that's a good thing. The bad thing is the CEO has been moved around already 4 times since I owned, and they don't have any idea how we'll be able to get out as an investor. So I'm hoping, keeping my fingers crossed that at least I get my capital back. But that was 5 grand. The fourth company still, because at that point I was just investing, and this was not after investing in Ask Energy, Skeet, and Equities.com. There were still all three companies were telling me that investment is doing good, will be fine. So I continued to invest to crowdfunder.com. The fourth investment I made was xperfy.com, and I could not show you guys here Ask Energy and Skeet because they do not exist. Funny, the fourth investment in Xperfy worked out really well, and because I was and it kept working out. After a year, when I found out Ask Energy and Skeet are gone, so I had lost 15 grand already. And then my 5 grand in equities.com are still there. But Xperfy, I had put 10 grand as well because I believed in the business. And actually, my 10 grand, if I would have kept it right now, it would have been worth 30, 40 grand. But after a year and a half, the CEO reached out to me and asked me if I want to sell my shares, and I was able to get, I think, 17,000 something for my shares. So I had put in 10 grand, and so this investment pretty much worked out. But that was, as you can tell, 4 out of 1. So yes, startup and crowdfunding are risky. And that's why I'm dabbling into though they are risky. So when I started, I was putting more money, but now I'm putting less money, more diversifying. So instead of putting 5, 10 grand, I try to put 500 or 1,000 bucks in those investments. Of course, it's high risk, high reward game, and your mileage may vary. The second website I tried out the same year was seedinvest.com, and I also did not like this website, even though Crowdfunder was more open, like Kickstarter, anyone can come in and start raising capital. Seed Invest, and there are others like those, which I'll go through in coming weeks as well. Seedinvest.com was supposed to be where they thoroughly vet out anyone who is listing on their website. And basically, they make money out of vetting out these companies, right? So they charge investors because they spend a lot of time in thoroughly analyzing these businesses, as well as they start the businesses who want to raise on their platform. So I made one investment in there, Tiply, Tiply. Didn't work out either. I lost 10 grand. Um, and I'm pretty sure most of you are thinking I lost money in my first real estate deal, all this crowdfunding deal. So next week I want to talk about the website which has worked for me. And I'm not recommending just that website. Actually, this year I have already opened account on 4 other crowdfunding website in 2021. Even though I started trying this out in 2015, but now I know I understand how it works. I have all my lessons learned, so I'm trying to apply those lessons learned on my new investments. The idea is that you should thoroughly, of course, analyze the business. So understand that business, what they're trying to do, the business model, how they got to the valuation. That's the key. And definitely look into owners and CEO, what their track record is, what they have done so far, right? And that's very important. Would they stay at the business? Would they survive? If they have to work through certain issues, would they stay put at the business, right? So those are some of the keys I have understood. And of course, now I also try to get into a late stage company. I'm okay to pay more money to get in a late stage company than an early stage company. Early stage means the company is just starting out. That may be their first phase or second phase. Late stage is companies where VCs have already backed this company. This business has been um, running for some time. They have actually generated quite a bit of revenue. Most probably they are profitable. Maybe they are not, but revenues are in over a million or so. So in those kind of investments, I have made pretty good money, and that's what I will talk about next week. But this week, I wanted to give an idea on crowdfunder.com. That does not exist, but you can apply the same principle to other websites which are out there. And seedinvest.com, of course, it didn't work for me. And the same time, there was another website. I don't want to spill the beans today because I want to focus on that particular website in my next episode because that has served me well. Again, I'm not recommending or advocating that you use only that particular platform, but it has worked for me so far. So, of course, I want to take an episode and go through all my investments on that particular platform. So thank you so much for watching. If you are watching this on YouTube, please subscribe and like the YouTube, this video, as well as subscribe to my channel. Please share it with your friends. If you are listening on Apple iTunes as a podcast, please subscribe and leave a review for the podcast. Let me know once you have reviewed. I'll send you a copy of my soft copy of my book as well. So thank you again for watching and listening to Wealth Matters podcast. I am actually enjoying this segment even more than my podcast episodes because podcast episodes is where I just go through Q&A with the guest and it's actually I learn a lot, but I also wanted to give more to my listeners and subscribers by talking about my particular experiments or experiences with different investment philosophy as well as different asset types or investments. So, and I also want to start, throwing out a joke every week. There was another joke someone told me recently about investment is that the market may be bad. It was doing really bad, but I slept like a baby last night. I woke up every hour and cried. So, hope you enjoy the podcast. Have a great day. Bye.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!